Right, we've got Sameer Narayan also joining us this morning. Sameer, Fed rate cut, that's the big headline. That's what we're talking about. Still waiting to see what happens here in India. But first, let's talk about that. And no reaction coming in either on the Dow.
Well, morning, Abha. I think the Fed has actually, shown its muscle, and they've gone in with a 50 bit rate cut. And I think the market was probably sensing it because when the correction began at about a fortnight back, I think the Fed funds rate expectations were already showing that in March they would get a decent rate cut, and which has come. But I think the moot question remains that the commentary post that it says that yes, I don't think it will fix the supply chain. Global growth may not be impacted, but it is just showing that there is somebody who's backstopping it. It's probably something like what Mario Draghi had done, that I will do whatever it takes. So it's that sort of a confidence, because it is basically to tell the world that yes, growth might be coming off, but whatever central bank action needs to be done, we are ready for it, and we will take the steps. But having said that, I think it also brings to us another question, that when you take the rate down to virtually zero, then I think somewhere it beyond a point it doesn't spur consumption. And today the way it works is that I think the global growth is clearly stuttering because the demand is completely coming off the pedal. And that could be also because when in China you have had so much of casualty, you had such a widespread incidence of the virus. How much of the human population is actually sort of has been affected, and they will not be no longer their lives will not sustain. I think those are questions, because that is actually a larger function of how the demand will shape up. But I think in India, our governor has also mentioned that yes, we will take whatever steps is needed, including providing liquidity. So I think all global banks realize that the first thing is you have to make money available in plenty. But the question is that money was already available in plenty. So I think what changes? So somewhere I think the demand thesis needs to be worked upon, and that is a question of confidence, which hopefully will build over time. But I think the biggest positive is that now, since it's no longer a China-specific problem, at least the US companies are now talking to the president, and hopefully you will see some sort of either an antidote or a vaccine or something coming up in the pipeline. Because earlier, if there was only 1 or 2 labs in China working on the cure, today at least it's happening all across the world. And as in, it's right here, right now. So hopefully that should see some good thing. But yes, I think it's still an evolving story, and maybe we need to give it a couple of weeks more to see as to, is it contained, and how's the spread across the globe, etc. So those are factors that will be basically on investors' mind from here onwards.
Right. But tell me, what does it spell for India? For the Nifty alone, we've had a 7.5% fall last week. Monday again, you cracked even after that gap up start. Just yesterday, we managed to sort of snap that 7-day losing streak. But again, like you're saying, investors are still very cagey, still very much in wait and watch mode. What should your first reaction be? Is it to protect capital? Is it to profit take from your HDFC banks, ICICI banks and Bajaj Finances?
Well, Aisha, I think there the ownership factor works a lot on the investor's mind, because typically you will see selling only in stocks which are widely held. So therefore, the names that you just mentioned would probably be the first ones wherever, even if I have to take some money off the table, these will be the first ones to get hit. But the corollary is that these will be the first ones to get the flow of money back the moment confidence returns as well. So I think the way it works probably would be that investor will then size up their own risk appetite. That, if I'm okay with, say, whatever trailing 4-5% return, and I don't want to be in, basically it's an asset call. I don't want to be in the markets for the next 15-20 days. But I don't think anybody takes such a short time call, because, it is an evolving story. You are likely to see more news flow in it. But to say that this will remain like this for the next 6 months, well, probably the answer is no. So yes, within the next 6 months, you'll probably see the news flow worsening first, and then the recovery will start slowly. So, because today the supply chains are completely cleaned off, there's no inventory in the system. So the moment confidence comes back, I'm sure it will be a larger than expected uptick, both in terms of the pipeline filling as well as the sort of IIP and the other macro high frequency data that you look at. But coming to India, I think if you see the growth data that came out last week, it is showing at least the first sign that electricity production is up, the decline in IIP or capital goods, decline in capital goods is not as much as was expected. So I think these are first signals, yes, but they should sustain, because along with this you've got the other data also on the auto side, which is just not showing any signs of revival yet. So, but that could also be a function that, there is a clear transition change on the emission norms happening. So therefore, you need to look at data from probably April, May onwards. So I think those are factors that probably will become more granular. But I think on a larger case basis, people would tend to look at, do I need to be in the markets and to what extent do I need to be exposed? So I think asset call and asset allocation is a larger prerogative today than perhaps any time else.
So out of 100%, how much exposure should you be having right now to equities? Given how uncertain the world is, everyone's been talking about increasing exposure to dollar, increasing exposure to gold, because typically you will see some people fleeing to risk haven assets.
Well, Aisha, I think their equity is typically long term. So if I have to build a portfolio, I can't get a better time than probably the next 3 months. That's the first thing. But if I'm already exposed, then I think the first decision that I need to make is, what percentage of short-term haircut I'm willing to look at and be comfortable with in case the market gives me a deeper correction than what it already has. Say another 5-10%, if I'm okay with, then I don't think you need to change much. But yes, if I need to put in further allocation, then I think I'll probably get a better entry point in the short term than perhaps now.
Okay. A couple of pockets of the market, Sameer, that are particularly disrupted. Of course, your travel, hospitality, metals, auto. I mean, they've just been hammered out of shape. And I mean, in the sense, we even had Mr. Badera come on yesterday and pretty much say the situation looks terrible. I mean, he said it as bluntly as that. And this is the same company that just a couple of months ago was saying green shoots. They've just been hammered out of shade, hit again by another event.
Well, Abha, I think the recency of news flow is what impacts the human mind probably more than anything else. So I think, when you ask somebody in this time frame, obviously there's nothing that is looking positive. There's nothing to look forward to. So those are factors that are pretty much the reality. But that said, I think if you just take the time frame out, say 6 months, then hopefully you will see a situation whereby the world will be less concerned about coronavirus than we are today. Then you will see some signs of revival. Chinese factories hopefully should start seeing workers return by this month end. And you will see world will start coming to a realization that yes, global growth may not be the earlier heady that one was expecting at the start of the year, but it may not be as bad either. But today the reality is that the inventories in the pipeline are completely clean. So which means if I need to sort of restock, then the month-on-month growth phenomenon will tend to look better than expected. So I think those are factors that one has still to play for. But today, if one were to look at any corporate or any market participant, the first headlines that impacts you is that, yes, it is a sell on rally market. One doesn't know what is the extent to which the virus spread will hit us. I think those are things that today, when you're already putting a GDP print of sub 5%, India, I think, is pretty much okay in the sense that we are not connected too much in the world. Our exports have anyway not shown great traction. Consumption has been our driving force, and investment is something that the government is clearly looking and making a effort to fix. So hopefully, if something starts materializing on those lines, you are likely to see something better in the next 6 months than what we are looking today. So if equity is long term, I think today is the right time for one to look at sectors like, yes, you mentioned travel, tourism. These are first levels. But then you have to also see when the crude is at $50, today the cost structure of any airline is probably better than anything else. So that the one that is weighing on valuations today is the demand contraction rather than the cost. But will crude remain?
Are you saying that in this decline one should look at aviation stocks?
Aisha, I think if one is seeing that aviation is a consumption proxy in a country like India, I think the stocks should merit a greater detail because today, yes, the traffic growth may not be looking good. The outlook may not be looking good. There's so much of cancellations, etc. But I think this will also tide over because all we have to do is roll out 6 months. So if you look at FY21 earnings, I think it will be a very different picture because if I look today, yes, the mood is all gloomy. Last 4 years, you've had hardly a 4-5% EPS CAGR. But do I see that yes, this will remain and probably get worse in the short term? Maybe yes. But over the next year out, I think there's definitely something to play for.
But Sameer, you were talking about as to how this decline is a good bargain hunting point, and you talked about aviation stocks. But what about some of the financial names? And let's talk about the SBI Cards IPO. Given the appetite that we're seeing, even in the current market environment, I know everyone's hoping that this is going to be the next HDFC Life, IPO, or for that matter, an Avenue Supermart. Will it really turn out to be as blockbuster? And is there those listing day pop that one can play in if one subscribes, if you get the allocation?
Well, Aisha, I think the amount of interest that the SBI Cards IPO is seeing is basically also a function of what has happened to the recent listing of a name like IRCTC. So the thing is that, now IRCTC, it's a monopolistic business. And to some extent, SBI Cards is like any other credit card. It is just that it is a second largest player. But I think that said, it is coming at a decent valuation. And the fact that because it's such a large issue, I'm sure investor appetite will probably be met quite an extent. So if you look at from a franchise perspective, yes, it's a larger call on consumer credit in India, which is still sort of evolving, and there is still a lot of growth headroom available. But at the price at which you're getting it, and it also is a function of, at the same time, if I'm getting, say, a Bajaj Finance or some other name at a substantially corrected price from the recent highs, then would I try to put money there, or would I try to put in SBI Cards? I think investors will then probably make those kind of bets. Because if today you see, given this, the current pessimism in the market, and the fact that in the short term we probably may be looking more downwards, if you see the current established franchises which have been around listed for the last couple of years, if they are available to you at 10-15% drawdowns, I think an investor will probably be looking at them also rather than only SBI Cards. So I think that's where people would probably be making a decision.
What else can one value hunt in? In this decline, autos, of course, are really grappling. The monthly sales have still not picked up. And then of course there is that BS6 transition, which in any case is an overhang. And now with the supply constraints of components, etc., what have you, from China also weighing heavy on autos. But then again, a lot of people are saying that this is the time to, bet on likes of a Maruti or a Bajaj Auto. Fundamentally as well, would you say the same?
Aisha, auto is a consumption angle in India which has been probably valued well in the last cycle as well. So I think today, when you're looking at fresh allocation coming in, or probably the next bull market, one would tend to look at more of the asset plays, because today when your cost of money has become virtually zero, then any asset which is currently quoting below book and earning a reasonable ROE should at least be given a multiple of 1.5 times book. So I think that's where investors would tend to look at safety, because if in case growth comes back, you will probably get growth in these names as well. So maybe let's say a metals play, or a utilities play, or oil marketing companies. I think these are names that perhaps today are not valuing growth at all, and you are getting a substantial discount to intrinsic value. So I think that's where one should try and look out for bargains.
Okay, fine. That's on auto then. What do you do with hotel stocks at the moment?
Klava, I think hotels, given the fact that yes, if this is going to be a transitory phase, then maybe you'll probably see most of the hotels report their worst quarter in the Jan-Feb-March quarter. So which means that whatever the hit that has to be taken would be taken in this quarter, and your base will be good. So you would be probably looking at travel coming back, things normalizing. So the growth outlook on 21 would actually get better. So I think you will probably be looking at evaluating these names to take a position in once you get through a correction in the next couple of months.
So many ideas. Only if people had the cash to put in all of these.
Well, Aisha, all bull markets go up on a wall of worry, and all bear markets come down on a ray of hope. So,
Sameer, what's going on with Telecom, even amidst still, non-clarity whether or not that there's going to be a one player, is it going to be duopoly in the sector or not? Or is it going to be all three players? And, a lot of back and forth between the DoT as well as the Supreme Court on the AGR dues. Is this the time to really buy into this uncertainty in Telecom, in either a Bharti or an Idea?
Well, Aisha, I think Telecom would, as time progresses, then stakeholders come together, hammer out a solution, Telecom would then become the next consumption proxy. Because today, when there is restriction on travel. So obviously a lot of companies would then resort to more sort of interactions on video conferencing, etc., which means more revenue streams for most of these companies. And this is all, the data services, so which means it comes at a decent margin as well. So I think the profit outlook, as we go through the coronavirus episode, would probably tend to get better as time progresses. And so therefore the only, question to answer is, will it remain a two-player market or a three-player market? Now, the fact is that we can definitely play the two players that we know for a fact will remain. The third player, one doesn't know, as to, that is a function of how the industry, the stakeholders, the government, the DOT, all of them come together. But I think on the other two, the ones that will remain, there's definitely no cloud that from here onwards, I think the profit has clearly seen a bottom. And today, the subscriber, last month, actually, there was some sort of a scare because you found that some consolidation was happening in terms of the subscriber base as the tariffs have been pulled up. But I think that is also a function that will probably settle down in a month or so. So if you're looking at investing for the next maybe 2 years, 3 years out, I think telecom offers a very good risk reward, given the fact that it gives itself, it holds up well from a profitability aspect. The profit pool will definitely has seen as a bottom, and the fact that consumption would probably be a good way. It will be a good way to play the consumption theme in India going forward.
Okay, Sameer, great to have you in the studios. We'll let you go on that note.